Hello, I'm Annabel Brodie-Smith. I'm the Communications Director of the Association of Investment Companies. And earlier today, I was talking to Guy Anderson, Manager of the Mercantile Investment Trust, about the prospects for the UK.
We believe the outlook for the UK GDP is positive overall. However, financial markets have been very strong over the last few years, and that has mostly been driven by a re-rating. Therefore, that does give us some pause for concern. Particularly bear in mind various external factors that are currently driving the financial markets. Those factors will include the quantitative easing program that's currently underway in Europe, as well as US GDP and questions over the Chinese economy. This is a very important election, and clearly if the polls or the bookies are correct, it's one that's going to be very, very tight. However, both the main parties are agreed on the need for fiscal consolidation, albeit their means of achieving this will be somewhat different. At an overall level, however, this election needs to be considered in the broader context of the factors that drive the financial markets, and many of those are external to the political landscape. For us, the dramatic and significant move in the oil price towards the end of last year was a very significant event. We believe that this is a positive for the UK GDP, as the UK is on a net basis an importer of oil. Our data suggests that a $10 fall in the price of crude leads to a 20 basis point increase in UK GDP. So we could be looking for a 1 percentage point tailwind to UK GDP this year. More specifically, we're positive on the UK consumer, as the data on household cash flow shows that the fall in the price of crude will provide a significant tailwind. And the latest ASDA income tracker for March showed a 9.7% year-on-year increase in available household cash flows. So at the moment, we're, as you would expect, most positive on the UK consumer discretionary space, where we're running a material overweight in the portfolio. These opportunities specifically are in companies that we believe are well placed to succeed, but which have an added tailwind of a positive consumer environment. So examples of this could be B&M, Poundland, Card Factory, or WH Smith's. More broadly though, as we run a portfolio that is built on bottom-up stock selection, we do look for companies across the range of industries and sectors. Another example of a company that we've found interesting is RPC, which is a manufacturer of rigid plastic packaging. So for example, they make the fridge-ready packs that Heinz beans now sell. This is a company which firstly is set to benefit from the fall in crude prices, as they are one of the largest purchasers of polymers for rigid packaging in the European Union. But secondly, this is a company that has grown significantly through the last 15 years by a combination of organic and inorganic growth. And they recently acquired Promans, which was a significant acquisition, which we believe will help further their growth potential.
Thanks so much, Guy. Guy has structured the portfolio to be resilient to a range of political outcomes, whilst retaining significant exposure to the UK consumer. Thanks so much for watching.